Snapdeal snapped off its proposed ties with Flipkart yesterday. We have Pran with us, Associate Editor, economictimes.com. Pran, hi, welcome to the show. Pran, please tell us what gave Snapdeal the confidence to take such a bold step?
Right. So great question, Shruti. To understand this, we'll have to go back in time a little bit. When the deal was happening, or first started around January, the Snapdeal founders were on board for this. There was a certain sum of money that they were supposed to get. But as months passed by, uh, a large part of shareholders were not really for this deal. Firstly, they could not understand why the founder should be getting around $30 million. And most thought that merging with Flipkart did not really give them enough. Some investors wanted more. The board was split into two. Some investors who wanted the deal to go through, the others, which includes Premji Invest, Intel Capital, they were of the view that the deal should not go through. So after months of hard negotiation, yesterday the deal fell through. And what the founders Kunal and Rohit now want to do is carry on with a trimmed down version of Snapdeal. They call it Snapdeal 2.0, and it essentially means that you sell off some of your assets and carry on with business in a very small way. And so the cash they have in hand now is around 385 crore, and maybe some from the earlier funding rounds. So 385 crore is not a big amount, and especially in a sector like e-commerce, 385 crore should give Snapdeal conservatively around say a year and a half, a year, maybe, to carry on business. So to think of carrying out Snapdeal 2.0, they would probably need funding somewhere else. It's clear SoftBank would not give any more funding given how the deal has gone through. What is interesting is there's another name doing the round, and it's a Japanese company again, and it's called Rakuten. And Rakuten is a e-commerce company in Japan, hugely popular. And what is interesting is what Snapdeal wants to be in its 2.0 avatar is pretty close to what Rakuten does in Japan, which is it allows merchants to make websites and then sell and carry on their business. So Rakuten has been trying to enter India for some time, and it has not done so. So this might prove to be a good opportunity for Rakuten to make an investment and come into India through Snapdeal. Both Rakuten and Snapdeal have not commented on this, so you can still say it's market or street speculation. But yes, the buzz is very strong. Uh, Rakuten is led by a gentleman called Hiroshi Mikitani. He's the fifth richest guy in Japan, net worth of around 7.4 billion, and it has business operations in financial services, travel services, and even has a credit card which is very popular. Not very popular in India, but some of the acquisitions it has made, like Viber, the messaging app Viber, is known in India. It also has stake in companies like Lyft, which is a competitor to Uber in US, and a photo sharing site called Pinterest. So if Rakuten makes an investment in Snapdeal, it should give the company headroom to carry on what they want to do. And sources have told Economic Times paper that there have been meetings already between the founders and a team of Rakuten. So let us see where it goes from here.
So, Pran, this move of Snapdeal, canceling this deal, what does this mean for the e-commerce ecosystem?
Right. So I think there are two ways to look at it. If you look at the e-commerce ecosystem, Snapdeal has been somewhat a marginal player for some months now. So the fight is between Flipkart and Amazon, and that is going to continue. Uh, Snapdeal probably will devote a larger part of their time now in pivoting to their new version. So, in terms of immediate impact on e-commerce side, I don't see much. Uh, Discounts will continue if that is what you would want to know. Uh, in all probably discounts will continue, but e-commerce will at the moment go on as it was till say last week. The impact would be probably more on the startup ecosystem, both on the investor part of it and companies. Investors will now become equally, and investors will be wary now about the kind of exits
Yeah.
that their investment may have in India. Uh, Early investors of Snapdeal like Nexus, Kalari, they are stuck. SoftBank wanted to go ahead and invest in Flipkart maybe. They are stuck.
Yeah.
They might make an investment on their own in Flipkart, but at the moment for the investment community, things do not seem all that good. And on the other side of it, what the founders have done uh, will show that there are times when founders can push back and hold back against very powerful and well oiled investment machinery. So in that sense, uh, founders will take some heart that okay fine, we've been able to fend off a stake sale which we did not want to. How prudent that is, that's a question time will tell.
Yeah, that's true. And what do you have to say about the employees, like who are caught up in all this?
Right, so I think what happens to the employees is most unfortunate. We already have stories which say that 80% of the employees have been or are in the process of being terminated. And this is unfortunate because a lot of them were told that, hang around Snapdeal, good times are coming. And for the 1,300 odd people who stayed back at Snapdeal, thinking that, the company would take care of them, it doesn't seem so. And I think a large part of the workforce in Snapdeal, which uh, can be anywhere around 1,000 to 1,100 people, can lose their job in the coming days. And I mean, some months back, they'd already terminated 600 employees. What is interesting to know that at one point of time, Snapdeal had around 10,000 people, and what Snapdeal 2.0 shows that they want to have around 200, 300 people at the max. So that's a huge layoff that you're talking about through the years. And for startups per se, it does not augur well because people will lose faith in working in a startup because it's becoming increasingly dicey that a startup will live up to what it's promising, and when the bad day comes, this is what can happen. So I think for other startups, finding talent might be the collateral damage. Done.
Thanks so much, Pran. Thanks a lot.
Thank you.